problems. Global private equity investment rose over 60% in 2010 and is expected to increase further in 2011. That's very buoyant, isn't it? However, the City UK says exit activity is at a 3-year high and new funds raising remains very depressed. Marko Maslakovic is Senior Manager of Economic Research at the City UK. If I looked at your latest set of data compared with 2010, I would say, great, things are looking pretty good. If I looked at it compared with 2007 and 2008, I'd say we're still pretty depressed.
Yes, well, I would agree with that. The private equity sector has seen a recovery in the value of business over the past 18 months or so. As you mentioned, investments by private equity firms increased by about 60% in 2010 to about $180 billion. And although this is a large increase over the previous year, it is still down by about a half on the peak level of activity that we saw back in 2007.
A couple of other issues. Global exits reach a 3-year annual high in 2010. What is that? Is that good news or is that bad news?
Well, that's very good news.
Yeah.
Essentially, private equity firms have been sitting on their investments for a couple of years.
But I guess it's where you exit, though, isn't it? That's the problem.
Sorry?
Well, I mean, does that mean they're just cutting their losses or they're actually getting out at decent levels?
Well, actually, trade sales and IPOs accounted each for about a half of exits during the year, which is very good news. And also secondary market transactions on the private equity market, where private equity firms sell existing stakes to other private equity firms, actually reached a high in 2010. And prior to that, there was a lot of fundraising in the market for secondary private equity transactions, which didn't really translate into a lot of activity. This has happened in 2010 and the first half of 2011. And actually, if we look at the exit activity so far this year, the second quarter of 2011 showed the highest ever exit activity of about $120 billion, which is very good news.
One thing that worries me, this $800 billion that needs to be refinanced over the next 5 years, is this going to cause a further slow pace of recovery for this sector?
Well, if we compare the situation today to the situation prior to the credit crisis, leverage is down. Private equity firms are contributing a bigger proportion of equity into these deals. Now it's up to about 50% from about 30% prior to the start of the economic slowdown. The City UK does estimate that there is some $800 billion in existing loans that will need to be either repaid or refinanced over the next 5 to 6 years. There has already been restructuring of debt to the year 2014 and beyond, and we think we'll see further cases of restructuring over the next couple of years.
Okay. Marko, thanks very much for coming in, helping us out with the story. Marko Maslakovic with us from the City UK. We'll take a break.